Hey, David Krasinski here from DK Home Loans, and today I want to talk about understanding the Arizona Pre-Qualification Form. Now, if you're buying from a different state, let's say that you live in New Mexico or Colorado or Idaho or New York, you will not have the same pre-qualification form if you're purchasing a home in Arizona that you have in your state that you live in. I think this is very misunderstood. And the reason that I want to bring this up is because Arizona has a very unique specific form that is required to be presented during the purchase contract when you make your offer. I'm going to go over the differences for you. I'm going to show you the form. I'm going to show you the differences. That way you understand why we think it's a good idea to strengthen your offer. Okay, so let's start with a basic pre-qualification letter for David Simple. Property address is unknown at this time. This is just showing the seller, hey, this guy's approved for a $500,000 purchase with a $400,000 loan amount. He's putting 20% down. This is not an approval. Approval loan requires verification of information that prospective applicant has provided, blah, blah, blah. So you can see what all this stuff says. And basically, this is just a form that says this person is pre-qualified. Let's take a look at the Arizona Association of Realtors pre-qualification form. Now you can see that this form looks completely different than the other form. This is for David Sample, showing he's married, he's not relying on the sale or lease of a property, he's not relying on seller concessions, the buyer is not relying on down payment assistance. So already we're getting more information about this client and his financial situation. If he's married, is he relying on the sale or lease of a property? Is he relying on seller concessions? So let's keep going. Here we have conventional loan. This is his primary residence. He's purchasing a single family residence, but if he was purchasing another type of property, let's say he was buying a manufactured home, that would be right here. Or if he was buying a PUD or a house with an HOA or a townhome here or a condos here. Now, here's the interesting part. This right here on line 17 is saying lender provided buyer with the HUD form. This really only applies to FHA loans, but the real meat of this is right here in line 18 where it says lender completed a verbal discussion with the buyer including a discussion of income and assets. Now, that would typically be a pre-qualification in another state. Some other mortgage companies even consider that a pre-qualified buyer. If we look at the next line, lender has obtained a tri-merge residential credit report. Yes. So here is disclosing the terms of, $400,000, his monthly payment. But this part right here is what really separates Arizona from other states. Now, if a seller reads this and it says, lender received the following information from the buyer, no pay stubs, no W-2s, no tax returns, no corporate returns because those aren't applicable, no down payment reserves documentation, NA for gift docs, but they have pulled credit, which we've already shown that here. How strong do you think the seller is going to feel about your pre-qualification? They're going to look at that form and they're going to say, this guy hasn't really done very much. I don't know if I want to accept this offer. I don't think if I have another offer that has the same purchase terms, but that buyer has supplied all their documentation to the lender, I am not going to select this offer because it's not that strong. We don't know if this person's really qualified. The lender could get their tax returns and there could be things that they weren't aware of by taking their information over the phone. They could get their pay stubs. They could only work 30 hours a week instead of 40. They could get their bank statements. There could be insufficient funds in their accounts. All these different things. People over the phone don't really know what they make sometimes as far as their own income. And they try their best to give the lender the information, but the fact is until the lender looks at their documents, they don't really know if there's going to be a problem either. And sometimes it takes another set of eyes or an underwriter to actually figure out if there is any other additional problems that aren't even an initial pre-qual. So what we do is we try our best to get all this documentation from you as a client, and then we look over everything to make sure that when you write your offer, we're not saying, hey, I'm sorry, you just wasted $1,000 on an appraisal and a home inspection, but we can't do your loan. We don't want that. And we don't want the seller to be taking their home off the market and still continuing to have to make a mortgage payment, and there's unqualified buyers that are in contract, because that hurts the seller. Then it also hurts the real estate agents that are involved, because they took the time to get you in their car, take you out to look at homes, show you homes, spent money on gas, spent money on time. The listing agent spent money on photographs and all the marketing for the property. And so the biggest thing is the reason why we ask for these documents is to make sure that when you write your offer, you're in the best position possible as a buyer. I hope that helps you understand what is the most important and why we ask for all this stuff, because I know it's a lot of information, but we really want to make sure that you're taken care of, put you in the best position as a buyer. If you have any questions, reach out to me. Thank you so much. Have a great day.